It's that time again. We get another CPI print tomorrow morning, and the talking heads in financial press and on CNBC are all declaring that inflation has peaked and that the worst is behind us and we all can go back to our lives. Well, it almost reminds me a little bit of transitory. What's up, guys? I'm Nobody Special. We're going to take a look at the CPI report from last month, what some of the heavy hitters were, and dive into what the prices of those things have done in the last month to see if we can't guess where the CPI might come out tomorrow morning. And with that, we are going to shrink my big, fat melon of a head, and let's look at some of these numbers. First, here is the CPI report from last month in April. We got that record-breaking 8.5%, the highest print in almost 40 years. That's a year-over-year number, and most of that was driven by energy, and we can see here the energy index was 32% year-over-year in March. Now, that was driven by energy commodities across the board, but you can see gasoline was up 48% year over year, fuel oil up 70.1%, energy services, electricity, piped gas, all of it more expensive year over year. So energy was the big hitter last month, but we've also had big hitters like used cars and trucks at 35.3%, although that number was a little lower than the read from February. New vehicles also driving up prices. And also food has become a big issue at 8.8% year over year. And of course, the big one that the government just loves to lie to us about is shelter, which came in at 5% year over year. We all know that rent has gone up way more than 5% year over year. I don't know who the BLS thinks they're kidding, but they're not fooling anybody. But we're going to look at that also. First up is food. And here we go, the FAO Food Price Index. This is produced by the United Nations. And you can see off to the side here in red, this is the FAO Food Price Index. And you can actually see that for the month of April here, we came down just a tiny little bit. Not all that much, but we did come down from that high in March. Now, that red line is the 2022 numbers. I want to draw your attention here to this orange line because these are the 2021 numbers. And remember, CPI is calculated year over year, not just month over month. And you can see here at the beginning of last year, food prices were on a steady march higher. Now, what we're going to experience in food prices is something called the base effect, where the number you're comparing it to is increasing faster than the current number. And it makes it look like food inflation is actually coming way down when really it's just these old numbers rolling off, making it seem like inflation isn't as bad. So when they report the food number, it's probably going to come in year over year a lot less than it was last month, but that doesn't necessarily mean food has gotten cheaper. We all know that there are food shortages on the horizon with the situation with fertilizers and the late U.S. planting season and the war in Ukraine. All those things are combining to create a real fiasco for food markets, but at least for the month of April, we're probably going to get a lower year over year number in the CPI for food. Now, moving on to used vehicles. Again, looking back, used vehicles has been one of the biggest hitters in the CPI report. Coming in last month, it was minus 3.8% month over month. Again, the base effect had a big impact there, and 35.3% year over year. Well, looking here, this is the Manheim Used Vehicle Value Index, and you can see that used car prices have come down again in April here. They peaked earlier this year and ticking just a little bit lower for the month of April. And again, the base effect is going to have a big impact because the number rolling off are these early 2021 numbers. So the number that we're comparing these to is starting to increase. So used vehicles is going to come in lower than it came in for the month of March. That's another point that says CPI is going to be a little bit lower. Now, what about new vehicles? Looking at the CPI from last month, we saw new vehicle prices had risen 0.2% and 12.5% for the year. Well, let's see what Kelley Blue Book has to say about new car prices. And this is from PR Newswire from Kelley Blue Book. Luxury share increases in April, pushing new vehicle average transaction prices higher, according to Kelley's Blue Book. I just want to read you a little excerpt. This is dated today. New vehicle average transaction prices increased to $46,526 in April of 2022, according to new data released by Kelley Blue Book, a Cox Automotive company. Prices rose 0.7% or $304 month over month and remain elevated compared to a year ago, up 13% from April of 2021. So according to Kelley Blue Book, we've got 0.7% month over month and 13% year over year. That will be just a little bit higher than we got for the month of March, where it was 0.2 and 12.5 year over year. So used car prices is going to come in below, but new car prices could tick a little bit higher. Now, the big one that has been really driving these inflation numbers has been energy. And remember, the energy index was 32% year over year. So I want to take a look at some of the energy commodities to see what energy has done. Starting off here, this is crude oil. And I put these red arrows at the beginning and the end of the month just to show you the time that we're measuring in. And you can see oil started the month around $101 a barrel, and it ended the month about $104 a barrel. So oil up about 3% month over month. Now keep in mind, they don't just measure the beginning and the end. They take snapshots across the month, and there was a little bit of volatility through April. So I'm not really sure where that one's going to land, but it's not going to be a big move either way. But if you look at the crazy month that we had in March with these wild price swings, starting with the Russian invasion of Ukraine, we're probably looking at less of an impact of oil prices on the CPI number for the month of April. And looking at natural gas, wow, look at what the price of natural gas has done this year. Again, the red arrows mark the beginning and the end of the month, with natural gas starting the month at about $5.70 per million BTUs and ending the month at about $7.28. So a big move for natural gas prices in the month of April. That's actually bigger than the move in natural gas prices that we saw in March. So natural gas will be a bigger hit to CPI than it was in March. Looking at gasoline here, again, the arrows mark the beginning and the end of the month. Quite a big jump for gasoline prices in April. We started the month at about $3.14 a gallon, and we ended the month at $3.44 a gallon. That's actually about the same increase in gasoline prices over the month that we saw in March. So the reading for gasoline probably be about the same as what it was last month. Now, home heating oil has been the one that's really been clobbering people this year. And man, just take a look at the swings in price for home heating oil, marking the beginning of the month here, starting at around $3.40, closing the month at $4.76. I mean, that is a massive spike for 1 month for home heating oil, much bigger than even the price swings that we saw in March. So home heating oil is going to come in with a big, big increase. That's going to drive the energy index higher for the month of April. So all in all, if you take a look, gasoline about the same, natural gas a little bit higher, crude oil a little bit lower, heating oil a lot bigger. The energy index is probably going to be about as big of a hit as it was last month. And now, of course, the one I just love to talk about, the rent. Obviously, this 5% number is bunk. This is a BS statistic, and I rant about this every month. The owner's equivalent rent, the way the government calculates the rent statistic, it is as simple as this, folks. They pick up the phone and they call homeowners and they say, hello, homeowner, how much would you rent your house for? And the homeowner answers the question without doing any market research or looking at comps or looking at what the neighbor's house might rent for. And they just give a number, which is typically about their mortgage payment plus $100 or so. And then the government says, good, thanks, got it, bye. And that's how they calculate owner's equivalent rent. They don't actually go and look at what places are renting for, what people are actually paying in rent. No, they just call people out of the blue. But you never know, folks. This might be the month that they suddenly decide to start telling the truth about the situation in the rental markets. So let's just take a look at what's going on. And this is in Fox Business, published just a few hours ago. Renters feeling the strain of housing affordability as inflation surges, according to Pew Research. And this sentence really jumped out at me here. Rental prices rose by 17% annually between March of 2021 and March of 2022. Meanwhile, average hourly earnings grew by just 5.6% during the same period, according to the Bureau of Labor Statistics. Now, that's a pretty powerful statement because remember, the average household pays about a third of its income after taxes on rent, which means almost all of the increase in hourly wages that these earners have made has gone to pay these higher rents. This says nothing about increased food and fuel prices, increased car prices. So this is people's lives getting more difficult. This is inflation really hitting people where it hurts. And 17% annually, that is a whole heck of a lot higher than the 5% number that the government gave us. And if you want to know just how bad the situation is, look at this chart they included here. Market rate asking rent for the past 3 years. And look at what rents did starting early last year, just marching straight upward. Folks, this is not sustainable. There is something that is going to break in the housing market. It may break before the government decides to tell us the truth. But so far, this massive increase in rent, I mean, look at this trend. This has yet to show its ugly face in CPI anywhere. So all these talking heads on CNBC and Jim Cramer and all these guys who are out there saying inflation has peaked, the next time you hear somebody say that, remind them, Where is the rental increase in the inflation number? If you're saying inflation has peaked, how come you're still telling me 5% year over year in rental increases? This chart begs to differ. So there you have it, folks. We've looked at what some of the prices of these big hitters in the inflation index has done. It looks like food is not going to hit quite as hard. Used vehicles is going to come down quite a bit, but new vehicles might actually tick up a little bit. Energy is probably going to be about the same impact as last month. And of course, the rent, the government lies about the rent number. Hey, maybe they'll start telling the truth this month. Stranger things have happened, folks. I just throw them out there. You do what you want with them. So all in all, if I had to guess, I'd say the CPI read will probably come in just a little bit lower than it came in last month. Not much lower. I'm thinking somewhere around 8.3%. And it's going to be driven mostly by the base effect and that decline in used car prices. But again, at any point, if the government were to suddenly decide to start telling the truth about rent, you could see that CPI spike to over 10% instantly. They're not going to do that, but it could happen. So you can expect all these talking heads on CNBC and in the financial press to declare victory and to congratulate the powers that be on doing such a fantastic job fighting inflation. They'll declare that inflation has peaked, only to be shocked next month and the month after when inflation resumes its upward march. Because in case you hadn't noticed, nothing is leaving China right now. There are boats just sitting there parked, waiting to load up. There is nothing coming into this country to replenish inventory. And prices on the shelves are going to start rising big time because of that. And that says nothing about the food shortage that we all know is coming. So CPI probably comes in a little lower, but there is no way CPI has peaked. And since we spent so much time talking about the rent and the increases in the cost of living, you can check out this video I did with the Economic Ninja about how the housing bubble may be about to pop again. Till next time, live small and dream big.